In today's video, we're going to be discussing leverage. Now, in my previous video, I talked about both sides, where I promised that I'll be creating this video. Now, in discussing leverage, what is actually leverage? It is the capital, the fund that your broker gives you, which is normally actually greater than your own previous and initial capital, right? Your broker allows you to trade with this amount of money, right? Now, see leverage as a loan from your bank given to you by your broker to trade. But in actual sense, if you have $100 and you are looking for a leverage, you can be given a maximum amount of money, but in the end, you are not allowed to spend more than that your initial capital, which is $100. Now, there are different types of leverage, right? The different types of leverage are 1:1, 1:2. There is 1:10 leverage, 1:20 leverages, 1:100, 1:300, 1:1000, 1:3000, and etc. So this leverage depends on the kind of broker you are using, because different brokers have their own leverage types, right? Now, how does this leverage work? It works with the account balance. Your leverage types work with your account balance. Let's look out on how to calculate leverage and your account balance. For example, if you have an account balance of $50 and you want to use the leverage of 1:100, what do you need to do? How do you know the amount of money that you'll be able to control? You simply multiply your account balance by your leverage, and that will give you the controllable amount of money that your broker will be giving you. Now, let's take, for example, a $50 account with a leverage of 1:100. $50 multiplied by 100 will give you a $5,000. Guys, you can see the amount of leverage involved in this. From you having an initial amount of $50, now your broker, after giving you that leverage, you now have the ability to trade with a 5,000 account. That's cool, right? Now, if you have a $100 account and you are using a leverage of 1:100, 100 multiplied by 100 will give you a $10,000, which is a huge amount of money. A $10,000 account is a huge amount of account compared to a $100 account, right? Now, if you're using a $1 account and with a leverage of 1:100, 1 times 100 is $100. When comparing the leverage type, it's a fair amount to choose. Now, a $1 account with a 1:500 leverage will give you a $500 account. That's a high risk. You having a $1 and choosing a leverage of 1:5 will give you a $500 account. It is a high risk trade, right? Now, in a more higher risk account, $1 account, choosing a leverage of 1:1000. 1 multiplied by 1000 will give you a 1000 account leverage. That is a very high risk. So this is how leverage will work. For you to be able to understand how the broker is going to give you leverage or the right leverage to choose based on your account balance, you simply multiply your account balance and the leverage you're about to use, right? Now, it is always advisable for a small account to choose a higher leverage. Yes, because this will give you an opportunity for you to, expatiate in your trade and choose a better lot size. Thank you for watching and see you in the next one. Bye.